All right, today we're going to talk about getting ready to set up for a trade. Um, for those of you that are going to trade on Sunday night, and I'll just mention Travis. Hopefully, you're going to be trading this Sunday. Today is February 9th, which is a Saturday. So, February 10th, Sunday night, hopefully, you'll find some time to trade. Um, because I really think we've got some opportunity here on um, on Sunday, actually going into the week, Sunday, Monday, Tuesday, Wednesday. I really think we got a good trade coming here. So you know me, I'm gonna try to keep this video short, but it could go more than 5 minutes. So this is for you mostly, Travis, and I just want to talk briefly about what we got in front of us and what I think a good trade is going to be. Okay, so you're initially going to be doing a one lot trade, and normally I would say, you know, don't keep the trade on overnight. So from Sunday night all the way to Monday during the day, and then Monday ends at like 4 o'clock. You wouldn't want to keep that position past 4 o'clock on Monday. But in this case, it may be okay. All right. So I want to talk about that right here, right now. So in front of us is QM oil futures. Way over here, where you see 76.9, upper left screen, white box. That's way back in October. So that was oil was $76.90 at that time. Okay. Now it's obviously came down all the way down to December 24th, Christmas Eve. It hit its low at $42 and it's called 38 cents. Since then, it's been making its way up, making its way up, making its way up, and we're over here right now. This was Friday, February 8th, the close for the weekend. Close for the week, going into the weekend. Now, what you're going to notice is there's this red line right here, this big fat red line. Okay? And this is on the daily chart, by the way. It's not the 5 minute, not the 15 or the hour, it is daily. So, this red line, I believe, is very revealing about what's about to happen to oil, at least over this week coming up for a really good trade, okay? So you notice there's a lot of stuff on this screen, and I'm going to try to keep it, try not to get too detailed. I know the screen's kind of messy here. So I'm going to zoom in a little bit. Magnify this out a little bit here. Now, I've talked about this before. I'm just going to talk about it briefly here again. The red line is the 3 EMA, and the yellow line is the 8 EMA. 3 exponential moving average, which means this tracks, this little tiny red line's tracking 3 days moving average, okay? Exponential moving average. And 8, and the yellow's 8. Now what you're going to notice is this red line here on January 4th crossed, or January 3rd or 4th approximately, crossed over this middle gray line. See it right here? This gray line. It went across over it. So this is on the plus side of volatility. I won't go into all the details about that, but basically this is significant, right? It stayed above both the yellow line and the gray line. This whole time stayed above it. Still stayed above the yellow line and definitely way above the gray line. And we get all the way over here to January 28th. The red line is still barely above the yellow line and definitely above the gray line. And it keeps going. Keeps going, keeps going. And then just this past week on February 5th, it crossed over the HMA, this green line, which is no big deal because it's done that before way back here, right? Did the same thing back here. Is it crossed over the green Hall moving average, or the HMA. Okay? So no big deal. We wouldn't make a trade we wouldn't short just because it crossed this green line. However, the next day, and actually 2 days later, something very significant happened. The yellow line, the red line crossed over the yellow line. See that right there? It crossed right over it. Now look all the way back. From way back here on January 4th, 3rd and 4th, the red line was above the yellow line the whole time. Look, yellow's here, red's here. Even here, it got close, but it still was above it, just touched it. All the way, and then, bang, it crossed over the yellow line. That's significant. Significant. So, follow me over to the left side of this chart. Look at the yellow line, the red line here. It's below the yellow line, right? It's below it. So when we see that, we tend to get downtrends. So I believe what we're seeing, back over to the right side of the chart, what I believe we're seeing here is the beginning of a downtrend. Okay. So this was Thursday, a big down day, and Friday, next to nothing going on. It's just really quiet day. Look how small this candlestick is. Okay. But also really, really important is that the red line went below the midline, the gray line, the volatility. This gray line is part of this big volatility band. Purple on the top, kind of light blue on the bottom. That's a midway point between this top line and the bottom line. Okay. Let me get rid of some messages from Google and YouTube. So that's pretty significant. The red line crossed over the yellow and it crossed over the gray. And we have the whole moving average turning red. This is all in the daily chart. Okay. All right. So I'm giving you that little bit of information because you might want to set your chart up like this. Okay. You can call me if you want it, and I'll step you through how to set up each of these lines. This is called the Hall Moving Average. I know you know how to get in there and edit the studies or the strategies. Okay. So go in there. This is the Hall Moving Average. This big thick line. This is called an exponential moving average. The red and the yellow, those are set to 3. This one's set to 8. But you can call me. We can go through it. Okay. This purple, gray, blue is the volatility band. You can change these colors of these lines once you go into your edit your studies. I like to have my Hall Moving Average green for up and red for down. I keep my 3 EMA red and my 8 yellow. You can pick whatever colors work for you. If you want to follow exactly what I got, just so we're on the same page, that's great, no problem. Okay, so I'm showing you this kind of stuff because there's going to be times where you're going to want to be making trades and not necessarily. I may or may not put out a video and all that. And the more educated you get, the more familiar you get with this stuff, the better, right? Okay, so this is Saturday right now. Saturday, 9th. Okay, 8:30 at night, 8:20. So tomorrow, the 10th. Going to be very interesting to see what the open is. I don't know if I think it might gap down, but I could be wrong. It maybe just come out quiet and go sideways. I don't know. But I'm not going to try to guess what it's going to do. I'll just let the market show us what's going to happen. But I think Sunday right away will be a good time to short your one contract, your one lot. Okay. That's just my 2 cents. I think it'd be a good time to short it. And as long as the market's moving down, which it may not do that right away on Sunday, but I still think it's a good time to short. Based on what I'm looking at here, I think there's some serious money to be made here sometime this week for the next Monday, Tuesday, Wednesday, whatever. Okay. And so let's talk about where I think the price is going to go. So right now the close on Friday, you can see over here was $52 and 0.725, right? 52.725. I think we're going to see prices come down to at least $51. Okay? I think we're going to see prices come down to at least 51. They could do better. Okay? So I don't know what Sunday's going to open, but if it does open quiet and it's in this area right here, and you short it in this area, man, you're talking about more than a full point, I think, is possible. Okay? So if you short, you might want to set your stop for, your limit for profit on to buy back. You can set it at like 51.50 if you want to be really safe and just get a full point out of it, right? A full point, maybe a little more. Okay, because what you don't want to miss, you don't want to set your limit too low, and then the week it doesn't give you what you want, right? So I'm just going to ballpark and say 51.50. Heck, you'd even do, if you happen to get in at this price right in this area, you can just do a full point down. Let's say you get in at 52.7, you can set at 51.7. Okay, that's $500. All right. So you'll notice I know the video's getting kind of long, but you'll notice there's some blue lines here, right? And you'll have to call me on that so I can show you how to set it up, because it's a little bit complicated to set it up. But this is called Fibonacci retracement. These blue lines are called Fibonacci retracement. So you'll notice that the price way back here in December went all the way up and touched this blue line, and now it turned down. If you look over to the left, you'll see it says 38.2%. Okay? Touched that and came down. It's kind of common for these prices to come up and touch these lines. Even here, back here in like the middle of January, you can see the price kind of stalled a little bit right around this line, the 23.6, and then continued to go up. Okay. It tried to come below it, but it never did. But on this one, at 38.2% line, it did cross over and it is coming down. Okay. So conservatively speaking, a lot of people would say they think the price will at least come back to here, which is $50.30. Okay. But I would recommend be safe. Don't wait for it to get this low. You know, take it at 51 or even 51.5. You know, again, that's if you get in somewhere in the $52 range, right? If we gap down on Sunday, then you know, you can always text me or call me, and I'll kind of give you my 2 cents what I think. I think either way, as long as it isn't a huge gap down, like if it gaps down way down into the low 51s or into the 50s, then I would tell you no, don't short it. Okay. If it's a huge gap down, then call me. Okay. All right. So that's the thing. Sunday, I would short, especially if it's still in the $52 range, particularly if it's like 52.5 or higher. Okay. On Sunday open, go ahead and short it, your one contract, and then set your profit for like, you know, basically a full point down. And for your stop loss on the upside, let's put it at like $250. So that's pretty significant. So $250, okay, would be half a point. Half a point. So if you get in at 52.5, then a half a point would put you way up here at 53, right? You could even maybe do, if you want to be a little more aggressive and you're willing to absorb $500 worth of a stop loss, then put it a full point up. If you know, if you short at 52.5, you want to set to 53.5, then do it. I wouldn't normally say that. I like to keep that a little bit tighter. Like I said, 10 or 12 ticks. But this week, I think there's such a good opportunity. I think you could loosen up that stop loss a little more, okay? All right. 15-minute video. I never could do 5. I know. But there it is. Give me a call, text me, and I'll talk to you soon. Bye.